Hi everyone, welcome to the Crypto Scout. Before we get into this episode with Patrick Dugan of TradeLayer, I just want to warn you and say it's a little long, but it's very, very interesting and very informative. If you're not a day trader and you don't have a lot of knowledge about how to do trades or technical analysis or how to use leverage to do shorts and stuff, this episode will at least provoke you to learn a lot. I have to apologize, half of the video is out of focus because I didn't have anyone helping me and my camera was on autofocus, so basically it focused on the environment for most of the video, so I apologize. But without any further ado, this video is very interesting and very informative, and you can definitely learn a lot about trading and about Patrick Dugan and his basically journey through life and what he's doing now with TradeLayer and how it can help Litecoin. Anyways, enjoy the show. Hey everyone, welcome back to another episode of the Crypto Scout. Today I'm here with Patrick Dugan of TradeLayer.
That's right.
Yeah, and he's coming all the way up from South America. We just came from the Litecoin Summit. We actually met up just like the other day. So he's doing some really interesting things in South America with TradeLayer, and I thought I'd interview him and let you guys know about it. So tell me a little bit about yourself first. Like, who are you, and since when have you been living down in Argentina, right?
Yeah, I moved to Argentina at age 22 after I graduated college a little bit early. I'm like, I guess sort of a privileged guy. I'm not like gonna be like, oh, I'm a libertarian. I'm like 100% self-made, like John Galt style. No, you know, I had parents who loved me and everything. So I saved them some money, and then I said, look, I want to make a video game. I think I can do it cheaply if I outsource it. I had to figure that out, but eventually I ended up contracting a company in Argentina. I got a game full of art for $3,000 and some change. And I was like, yeah, I was like, oh, wow, the value here. Now, Argentina, of course, was progressively getting more expensive every year as they play this game, where like there's more inflation than how much the currency devalues, and that went on for a while, and I got squeezed by that. But I was young, I bought into it, I moved there, you know, fell in love, whatever, right?
Worked. So now you're there to stay, basically.
Well, I live in Chile now.
Okay.
Yeah, because Argentina got too hot for me. And yeah, after the capital control started, I kind of was getting sick of it.
Yeah.
So I looked at Chile, I Googled Chile startups to see how much red tape there would be to live there and operate. And the first thing that came up was like $40,000 startup Chile. So I said, click, you know, I'll take it.
Let's do it.
Yeah, and when I was there in that program, the currency was actually a little bit strong. It ended up being a little bit more than that. And after being a government welfare recipient, I guess I moved a little more to the center politically. I figured, like, okay, I don't have any hardcore cap cred anymore, basically. But yeah, basically by throwing money at people like me, and also to be fair, they do give some to Chileans and stuff, but you know, they're kind of classist there. They don't like to give their own people as many breaks as they would like to give a guy like me breaks.
Yeah, well, they want to attract entrepreneurs, so it's not necessarily a bad thing to do.
Yeah, and then since then they did introduce a student loan program.
Cool.
You have to borrow in their inflation index currency, but the interest rates are reasonable. But it's not a gift.
Right.
Like a lot of people would go into debt for the amount that I got gifted to me. And so anyway, I'm very appreciative to Chile. We're paying it back to Chile by creating some actual tech jobs in blockchain development, and not just an exchange. So there's a few of those jobs in the area. There's Buddha and Crypto Market, and they have customer support, and they have some devs on staff. But I think I saw at the Blockchain Summit there were some Neo devs in town. Tendermint has a Chilean guy working with them. So, you know, there's definitely talent in Chile. The Argentines, despite all of their chaos, actually had a one-up. So they have like more liberal politics, right? They have free education. So the English literacy rate much higher, and of course when you have educated people who don't spend a lot of that intellectual power like managing money, they start to think about, you know, wouldn't it be nice if there were more like leftist policies and stuff. So then it created this basis of support for Christina Kirchner, and she was doing like pretty good with it. You know, they were running the commodity game, right, with the, you know, milk that cash flow and then spend it. People were coming out of poverty. But then you got to like shift gears. That's like second or third gear. You got to shift into fourth, right? Where we start to open it up a little more and then shift into fifth. Instead, she kind of overheated the engine. And I was living with that. I was living there during the using Bitcoin during the capital controls. So I had a cash dealer Okay. Yeah,
That's
it's not like,
old school.
I got my direct deposit, so my auto pays are gonna hit, and then I'm gonna like go on and pay my bills or transfer to my landlord.
Yeah.
No, it's like you got to make an appointment with this guy Dante, who's got like hairy arms. Who's like an Italian guy. He's like, kind of had this Godfather voice.
It's awesome.
Yeah, I guess. I mean, he was all right. He had good customer service for as inconvenient as the overall thing was, but you can imagine like the inefficiencies that having an invalid financial system creates, right?
And this was in 14?
This was in 14, yeah.
Wow.
Yeah.
This is really when the getting was good in Bitcoin. So
that was the bear market. So I was a day trader. I'd go short. I would flip alts, like I traded Counterparty and a few other things.
Nice.
Whatever it could to survive. And that's when I got involved with the Mastercoin Foundation, and I invented this concept of decentralized banking.
Mm-hmm.
So basically, if you go to BitMEX, you put a Bitcoin on there, and you, let's say what it was like 62.50 right now. Let's say that's the last I checked. So you short that many contracts, you're even. You're not taking any net leverage short, and you're not even under hedge. So then as the market drops, let's say the market dropped by half, your 1 Bitcoin short position would now be worth 2 Bitcoins, right, at 3,100.
Cool.
Which we might, maybe we'll be seeing soon, maybe not. We'll hopefully, if we do, I'll buy it. But
I don't want that, but all right.
Yeah, a lot of people will be very unhappy in that time, but I think it would be temporary. So it's inverse quoted. So the converse is that if it were to double and you were long, your 1 Bitcoin long position would be now worth half a Bitcoin, and you're at like 12K or whatever, and your profit would be half a Bitcoin. Okay. But that's at 12K, right? So it's still the double in dollars.
Yeah.
But it's not quite as good as like if you can take debt and buy Bitcoin outright. I'm not like recommending anybody do that. I do that. I did that in 14.
Don't do what I do.
Yeah. Well,
you gotta have experience.
It depends.
Honestly, I always tell people in my videos whenever I talk about a new project, it's like, do your due diligence. Don't take my word for it, and definitely don't buy anything without doing more research than what I'm telling you.
I'm big into that.
Yeah.
I have a Twitter account where I'm always seeing things about different things one could do, but I got in the profile like not financial advice. Yeah, do your own. It's all about size. Like I had a bad quarter doing these delta neutral strategies. So for instance, instead of borrowing money from the bank, buying Litecoin, for example, and hoping it doubles, I would buy Bitcoin in this case, because you can use it on BitMEX, hedge it, and hope to receive an interest rate in dollars that's higher than what I'm paying. Right? Like that's...
It's like what a bank should do these days, but no, instead you're actually losing money.
Yeah, that's really being your own bank.
Yeah, that's the reality, and that's part of the power of all blockchains right now, really, is that at least if you know what you're doing, you really can have your own bank in your wallet. Because most of them are going to be deflationary, hopefully, or at least they should be eventually.
Yeah, I love it. I've always used it as a sort of way of generating income, a way of moving money, a way of doing a variety of things other than simply being long a commodity, right? Which I'll be from time to time, but and I have a little hodl position, but it's just not my style. I'm a trader at heart. I started trading around the time when I moved to Argentina originally. I was punting on Forex with like a $500 account. I'd get margin called. Nice. It was stressful, whatever. You take your licks, you learn. So where I am now is that like I had a bad Q3. Well, still, it's not over yet, but whatever. It wasn't great, and I'm down like 2 or 3%. And that was like that was a slog. But I'm not sizing things in a way where I'm gonna change my life for the worse. I'm just gonna have like kind of a bad time at work in a sense.
It's gonna maybe be patient. The times might force you to wait.
Well, so like what I do is I'll buy and sell different derivatives,
right?
And I've been messing with the options again lately. So the problem is you'll have to trade two things, and then they move relative to each other, and then you trade them again, and you've done a ton of volume by the time you're done, and so you have to get the right executions as a maker, at least on one side of those unwinds, to make the fees anywhere near reasonable. So it's actually quite challenging. And this is in part why I want to get fees like so much lower, man.
Right.
Like this is not professional, I think, these 7-10 basis points.
Yeah. And do you use any trade bots at all to do trading?
Yeah, so I have a guy I work with who worked on Wall Street as an HFT guy, and we met in Buenos Aires in 2012 kind of randomly. I was really happy to have like $5,000 because I was a consultant and I'd been so broke. at like 26, and I was like, I got $5,000. I was real happy about it. So I went to dinner, and this curry house. It was like this. These two gay guys, and one of them was an Argentine nuclear physicist, and the other was this Englishman who just was an alcoholic, who just really enjoyed being mean to people. And for some, there's all kinds of relationships.
Sounds like a good time.
Yeah. So this English guy started like calling me out, being like, "Oh, you're like a corporate guy, aren't you?" And I'm like, "Not really." And he was like, "Oh, well, I bet you don't have any property, do you?" And I was like, "I got $5,000." And he was like, "You don't have 2 pesos to shove up your ass." Like, this is like verbatim, and I'm just, I take eccentric characters in stride. Yeah. So I met my boy David that night. He was sitting there eating, and he thought it was hilarious. So we started hanging out. Years later, we come back together to basically co-found. Like he was more passive in that, but that was basically the inception of this. When after everything that happened with Omni. There was some personal stuff with my family.
And tell them a little bit about what Omni was, right? That was a previous company.
Yeah, so Omni was originally Mastercoin. It was the first ICO. It was, to be succinct, not super well managed. And I came in as a sort of an adjunct researcher initially, then as a volunteer board member. And then eventually I was running the treasury, the meetings, doing spec, working with the team, doing a lot of biz dev, way too much biz dev. That was in 16. So 17, I kind of went away for a little bit, and then I came back, and it was like, all right, it's time to make good on this stuff in 2014. And I went out to see David out in Poland, of all places, and we were talking about market structure, and he was giving me his feedback, because I was especially trying to figure out this Tendermint integration thing where we have fast order books. So the idea is, if you have a DEX that's just on Bitcoin or Litecoin even, so Litecoin feels a little smoother because of the lower block time, but there's always this risk that a miner, let's say like Jihan Wu, he's like this evil mastermind in the narrative. He's not really, he's just kind of a smart business guy. But let's say there's a miner who is also a trader. Mm-hmm. Let's say they have like 10, 15% of the hash power. That might be enough for them to execute a selfish mining attack and try to do a reorg on the chain. Or more succinctly, even if you add, let's say 5% hashing power, you're running a number of nodes in the network and you run them with different code. And you look for these trades, and then you say, oh, no, we're not going to relay that. We're going to put out our own trade. And statistically, they will have an edge getting into the order book. Wow. So when you send out a Bitcoin transaction, it goes to a node, right? And then that node sends it out to 8 other nodes and so on, like fireworks, Yeah. And then you get to a saturation point. You get into the mempool, and then miners who are like trying to get that proof of work, and once they have it, they'll scoop things out of the mempool and put it into a block, and that also has to be propagated, right? Hence the whole scaling debate. You can't have orphan blocks if you have like 32 megabyte blocks, and it takes, so that's like 8 times bigger, but it takes 20, 30 times long to validate. Suddenly the risk is that you will have more orphan blocks and you disable the network. That was the contention there. Yeah, so it's not great by itself. It's nice to have the capability, and it's slow and expensive. So if you have a side chain, and this was being kicked around in 2015 originally, like Blockstream was kicking it. So they were talking about Liquid. They've got Liquid now, right? Yeah. So Liquid is a federation of signers who are like, this is the sidechain, the sidechain kind of runs on its own impetus, I guess, and then they bridge you over. So they'll act as your sort of money changer between A to B. What we are trying to do with Tendermint is enable you to have your balance money on the layer. So this isn't UXTO money. This would be like our Metacoin or a derivative like DUSD or something like that. Yeah. And you can pledge that as collateral, create a sidechain in Tendermint. So you don't have to create a Tendermint chain that's collateralized by Atoms, which is Jaquan's currency for Cosmos, right? So they raise money for that. They've got a bunch of teams working on that, and that's great. We'll probably have interoperability. But what we're trying to do is allow that to be anchored to what some would view to be a harder form of monetary base on the Bitcoin chain or on the Litecoin chain, for example. So when you have that, you can do cool apps, right? So you can have a state channel that is governed by those validators and that will spit out things, and the protocol can lock that in and go, okay, so this reference TX says it's actually canceled, right? And we won't fill it, right? And you can delegate that authority to these sidechains, and then if the sidechains behave badly, if there's a Byzantine failure, we've got the R&D done on the graph algo to create this peer-to-peer settlement, but we're not quite done yet with the SPV proofs. We're still in R&D on that, but we're trying to do what Rootstock had originally posited, and then they kind of were just like, okay, let's just do a federation and get moving, because we have some very reputable people. They've been in the end. I know that guy, Diego, going back to the La BitConf before I went to my first conference. I was like, hey, I want to speak at it, so that's how I met them.
Okay.
Before anybody was anybody, basically. So we're gonna try to like leapfrog the R&D that Jaquan's done and that Sergio Lerner have done in order to create. And I think this narrative has come out that like Litecoin doesn't have any smart contract functionality. Now Rootstock will do their thing for that too, right? So if you want like EVM style smart contracts, where the bytecode is hashed and it's like, okay, you spend a certain amount of crypto to execute this code, like Ethereum, then Rootstock is for you. But if you want to run an app that's just in JavaScript or Java or whatever, and then it's making calls to Tendermint Core, and your money is based on just on chain, and then eventually, like the idea, okay, let's say you're a validator, and there's like a two-thirds quorum of validators that sign a block, and that block says you lose all your collateral, right? So normally if you don't behave, validators can sign in, you get slashed for like 2% for that, or you get slashed for 10 basis points because there was a block where you didn't have uptime. It's like more innocent. There's like templates of what you could have in the app to check validator behavior. But if there's something like that that's like a robbery, you should be able at the root level to publish a big old claim transaction, possibly in a sequence of, you get in the mempool, you put out the next bit, concatenate them. So that's a little clumsy, but and it could be very expensive. I mean, you might be talking about hundreds of dollars to put, well, on Litecoin maybe not, but it could add up. So we'll see how big these SPV proofs would have to be. One nice thing is that Tendermint has instant one block finality, whereas Bitcoin and Litecoin and Ethereum and so forth, they all have pseudo finality. So after a certain number of blocks, you go like, probably there's not going to be any reorg attacks with those, right? Hence exchange policies, right? The Casper friendly finality gadget that Vitalik worked on for Ethereum is attempting to sort of suture this with a like a cutoff point that's like a hard cutoff point in the protocol. So that's like undecided. That's like definitely a good idea. Like there's nobody can say that that's going to be bad for Ethereum. Whereas Casper proof of stake is more speculative, right?
Yeah, or a guessing game.
Yeah, and it's the same thing with Cosmos. It's like if it's all proof of stake, and like the Cosmos hub chain has, I don't want to like, talk down on Ethan and Jay's project. It's awesome. I'd like to work with them more technically, but let's say there's 100 or 150 validators on the Cosmos hub chain, and then you get a Byzantine failure with 100, right? So because there's so many validators, it's like, oh, it's a CDO, there's like so many mortgages that can't all fail. Right. But actually there could be a correlation, there could be collusion, blah, blah, blah. So like, where does the buck stop? And then with proof of work, we have like some hard physical capex where the buck stops. And so my supposition is that the market will want to get the best of both worlds, get the relative so-called hardness of proof of work. And I mean, I kind of agree with Chris DeRose that it's all sort of fiat currency at some level. Yeah. But that's fine. Money is a social convention inherently. But you get the merit of that, and then you get the instant finality and the sort of programmability with Tendermint. And then the layer allows you to have money on the proof of work blockchain that has interesting dynamic properties.
Cool.
Yeah, such as, I know that was a long one, such as, and this is the killer app, this is the most important thing, you can create dollars, you can create euros, you can create yens by having cryptocurrency, and then you go short, just like on that BitMEX hedge, and then you're locked in at that dollar value, and you get a certain amount of swap payments from that.
And so this is what TradeLayer is trying to do, right?
That's what we're trying to do this year.
So what would you say is the biggest pain point in the market that you say you're trying to solve that would be better than just using like Tether, for example? Well,
there you go. Tether's, I think, the pain point, right? So Tether has 2.761 billion out right now and some change. They do at least 9 figures daily volume. I think they do closer to $1 billion and some change given.
Yeah.
They made the wholesale volume just about what it needs to be for those exchanges. And it's really kind of like an exchanges club. It's kind of like, it's like the Babysitters Club, but for like 2014 era, like and 2015 era exchanges who kind of know each other and trust each other. And then the community trusts them. So we're willing to use this crypto dollarization stopgap because we need it, We need a way to have I don't think US dollars are that bad. I think they're kind of good. They come into existence.
Pretty stable, even though there's a central bank continually inventing them every day, but
I think the debt super cycle definitely is going to unwind and it's going to be disruptive, and I think the reserve currency status will be lost some sooner or later. Maybe it'll be 10 more years, but
who knows?
But what's interesting about fiat, though, like let's not throw the baby out with the bathwater. You borrow money into existence. There's a time horizon there, And then you go all the way down from like a 30-year bond to demand deposits, and it allows people to have. Now, of course, in practice, if you're like using the Argentine peso, right? Like I knew a woman in the 80s. She would get up and go to the grocery store because if she went after work, the prices would be higher. Yeah, that was.
Wow.
They had 3 issues. Yeah, they replaced the 10,000 peso bill with 10 australes, and then they replaced 10,000 australes with 10,000 pesos again, or maybe it was like new australes, whatever they called it.
And how many years is this over?
That was over like a decade.
Yeah.
It was like about 3 years per.
It's pretty confusing though.
It was about a 10x per year in that decade. That was like the hyperinflation decade.
Hyperinflation, sure.
And Venezuela's going through that now, right? So we love to point, Bitcoiners love to point to hyperinflation as like an easy thing. And I used to be a gold bug kind of when I was younger. I traded gold on Oanda with leverage, so I wasn't really a gold bug. I was more of a speculator, but I would read all these older guys who were read Zero Hedge, and I got immersed in that. And then it's funny, so it didn't happen, right? So what happened? Well, part of it is like the way money works. You have M0, right? So that would be like base money, what banks have with the Fed, and the physical dollar supply. And then you have M1, which would be like something in the middle there, and then M2 would be all of the money that's created through lending.
Okay. Which
ends up aggregating into all of the money that you see in your bank account when you go online. Yeah. Right, the digital money.
Yep.
So M3 is when you do like certificates of deposit. That's like longer term money, or when you create dollar debt abroad, and you can do it synthetically with a currency swap. So a bank in some country, like a Brazilian bank, have the license to create negative amounts of reales, and then I enter into a swap with Citibank, sponsored by Citibank, where they will exchange my my cash flow from reales to dollars. Okay. So I essentially hedged that asset in reales into an asset in dollars, and I could then represent to my customers a USD account. And I've got dollars in the bank. I got maybe like $10 million in cash in my local branches, but and that's also helped the dollar as a reserve currency. It's like the Bitcoin of fiats in that way, right? Is that people like to hold it as reserve, but then they have more dollars that are digital, and they're able to hold that up because of these hedges that they trade. So I know that's a little wonky and behind the scenes and everything, but ultimately what happened was, in the era of globalization in the 2000s, these synthetic dollars were multiplying it by the trillions, and they were actually they were buying assets. This was before the Fed. And then the Fed existed, but before QE, right? Okay. And then after the financial crisis, when all these balance sheets got big holes punched in them, mostly at the M2 level, right? But then you had these huge dislocations in Forex. The Fed had to give out swap lines to other banks. Like, what does that mean? It means that the Fed was willing to say to these guys, we'll type in and $100 billion into existence temporarily for you to cover your debts in dollars and keep the euro-dollar system alive. And if it wasn't for those swap lines, that's kind of, you've heard about the bailouts, like the fiscal, congressional bailouts. That's just stuffing cash into banks' balance sheets. But it was actually those Fed swap lines that, if you want to get real technical, that saved
the big
day-to-day operations globally.
Yeah.
So what happens also if like Deutsche Bank is your counterparty on your swap and you did some Swift transaction 6 months ago to book $30 or whatever, and you think that's a done deal, whatever, you already had your payroll that month, it's over. But now all of a sudden you find that the swap exposure you have with Deutsche Bank is underfunded because these swaps were all very loosely margined. So what Dodd-Frank did in 2010 was introduce tighter regulation about how large interest rate swaps and currency swaps would be traded between banks, how they would post margin with each other, and it's quite tightly regulated. So what I've done is figure out the regulatory path so that real people, peer-to-peer end users, should, I believe, be able to legally hedge their cryptocurrency with a swap as an end user, in the same way that a power company could trade with, Enron back in the day or whoever it is now, go short electricity because they want to fix their price of electricity. They're an end user. They don't need to be regulated too strictly by Dodd-Frank. So the CFTC has like data repositories. So we're going to put this little supplementary data in the TXs if you want to trade in a compliant mode, and then you'll be able to sweep the blockchain and roll these up into a data repository, and eventually we'll be able to analyze large contract positions and other things that the CFTC wants in order to regulate, make sure that there aren't any large sort of Bitfinex, tether printing, whales, wash trading kind of things.
Yeah, really interesting.
And we also need to, this is another R&D thing that's still up, but we need to figure out a nice little pattern algo to sort of detect, not necessarily indubitably wash trading, but pattern wash trading. And then validators could blow a little whistle, so to speak, and penalize the people who seem to be pattern wash trading. And then it's just a question of how clever wash traders could be to try to wash trade. I'm gonna cool a few beats and let you jump in.
I was gonna say, yeah, like huge answers.
Yeah, some sprawling. Sorry.
Yeah, you're really actually kind of like an economist. I actually wanted to ask you if you've heard anything about what's going on with Deutsche Bank. Some people think Deutsche Bank is potentially going under. They've been laying off thousands of people. Do you know anything about that?
I don't. I'm not an insider in that level. No, I don't know. But yeah, I mean, they've been the
powerhouse of Europe, kind of.
Right, but also they were the biggest dealer in derivatives, and they were one of the only banks that was at that level that didn't get restructured. Whereas like Citi and JP Morgan. And Goldman, obviously, they kind of were shrewd enough that they were in actually a position of strength going through the crisis. So Deutsche Bank's the only guy, the only one who was kind of in the middle, who was overexposed, but didn't get cleaned up.
Yeah.
And didn't play it shrewdly either. So
okay.
Yeah, I mean that's what we've all thought that for years. That if there's going to be some crazy contagion, that it's going to come from Deutsche Bank. So when I moved to Argentina the first time, it was 3 weeks before Lehman went under. And I remember reading about the quadrillion and derivatives, and I didn't understand derivatives back then. So I was like, holy shit, $1 quadrillion, that's insane. I need to get out of here.
Yeah.
This is going to get really weird.
Wow.
It might affect monetary policy, so that's interesting.
Sure, yeah. That's really interesting. I hope some of you guys want to do some investigative work on a Dodd-Frank and such, because that's a lot of stuff that's so far before me. I'm trying to just kind of start on a clean slate for myself and kind of move forward on what's going on in the future and just kind of plan for the future. And
so basically, my thesis in short, and then I'll give you a whole fucking turn, buddy. I know I'm running over you here. We've been losing M3. The central bank creates M1, let's say,
right,
and that goes and pumps up IKEA stock, and
we create M3. Every time we're
going to create M3.
Well, so, every time you use your credit card, aren't you technically creating M3?
No, you're creating M2.
Okay.
Yeah. That's still pretty good stuff.
Cool.
It's not M1. I mean,
yeah.
So yeah, I like that. I like creating money just in time to pay for it. It's a fun feature.
Yeah.
So when the Fed created M0, it didn't create inflation because it kind of offset this suck that was going on elsewhere in the system, and you create this low time preference environment where you can just invest in anything because there's no cost of capital or there's a very low one. And actually crypto, it's not so much a flight to quality because like, oh, the dollar is so weak. It's just another, like, I hate to say it, but let's all be self-aware and like not get wrecked. It's another risk-on asset class that might end up having fundamental traction, and I think it will, and I'll get into that. But right now, it's correlated to stocks. Okay, so if when crypto peaked, like here, whoop, right in like January, and then it was a nice karate chop. The stock market did the same thing. It had a karate chop, and it just handled it a little better. It went sideways and higher instead, because there's actual pricing power in these corporations. There's actual discounted cash flows to look at, and that's what I want to bring in part to this asset class, right? So we're going to have this meta coin so we're forking off of Omni with TradeLayer, and you have to have this meta coin native token because it can do things that UXTOs can't. And it can do things that Lightning Network can't do. Now,
can you give us some examples? Just because some of this, you're going so fast, I feel like some people might be lost on that right now.
Okay, so like, I want to create a dollar coin. So I could put Bitcoin into Lightning, and then and I think they'll benefit from the algorithm that we created to figure out how to actually route this. It's a different kind of routing than the payments. You could probably have a swaps exchange in Lightning Network. And you could say, okay, buddy, I'm going to go short, and this Lightning bit of BTC that's locked up is gonna have an unrealized P&L that accrues to it if the price goes down, or vice versa to you, and good luck to you. But I want to hedge it. But then I don't know how fungible or flexible as a payment mechanism that would be. It seems to me like it would be a decent portfolio option, kind of like having BTC on BitMEX. Right?
Okay.
Or having like 0.1 BTC on BitMEX and another 0.9 on a cold storage, and you have the position, and you rebalance, right? But and that's fine. That's pretty good. I think that'll be competitive, and I don't mind that. I'm here to unleash the bull. I'm here to I'm like more of a Promethean kind of character than a Midas kind of character or whatever. I'm not trying to monopolize mathematics. But what we're gonna have is, I would like to say, a more legit peer-to-peer cash as a bearer asset. That's a token. It's not even like colored coins where it's a dust and you can spend the wrong dust. It's there forever. That's the beauty of the balances thing. You get that op return out there in the history, and until there's like another op return saying, okay, now this spends over here, it's on that address. So it's as hard as Bitcoin in that way. And you can spend it directly. And you could perhaps put it on a cold storage, having it accrue yield for you, because we're going to have these perpetual swaps. Yeah.
And so to be clear, this is it's its own currency, but you can explain again how you can tie it to any fiat currency. So earlier, that's what you're saying is one of the main use cases, right?
Yeah, we're going to, so it's kind of a liquidity catch-22. So to start, we're going to have an Oracle Litecoin contract. And find
tied to Litecoin.
Yeah, so you'll have a quorum of oracles. So this is sort of compromising a little bit in centralization, relying on reputation as an asset, which I realize is like such an important part of the capital structure. It's kind of the invisible
for all blockchains, right?
Yeah, I think so. Yeah. Anyway, so go ahead and reorient me there.
Yeah, I was just to say, so the main use case I see so far is basically if you want to basically hedge against any fiat currency worldwide, this is going to allow them to do so, right? So I'm trying to see, how does this look for the end user? Let's say I'm a new speculative investor. I've got 10 grand and I want to hedge with Chinese yen because I think it's going to go up in value or actually down in value. Let's say that. So how do I use your TradeLayer to help me invest in Bitcoin and hedge against Chinese yen?
So there'd be a bunch of contracts that you could trade. Some of them could be Oracle based. So probably world markets like those Forex pairs, E-mini, oil, gold, probably will have oracles for that. So, oracles aren't great for the long term because you don't have that absolute sovereignty and independence. You're relying on them to be viable and having uptime and all of this. That's where we'll get a start going. So then the fees for the contracts are going to start at 2 basis points as a taker, and you get a 1 basis point rebate as a maker. So it's lowest fees in the business. You could even get filled on BitMEX and get paid 2.5 points, and then pay 2 points on TradeLayer, right? And actually get paid to take liquidity. So we're gonna have a fee cash flow And then there's also going to be a reward. So market makers will get some of this metacoin, which I'm calling.
And market makers is your word for a miner. Is that right?
In a way, it's a good analogy. So a market maker as a job is like you are quoting all the time, and your business is to always just make a little trade. Market makers categorically are people who have posted an order and then an order that matched it posted later. You provided liquidity first, so you get paid instead of having to pay, right? So the half of it that isn't a rebate will go back to the token, buy it back, burn it. Meanwhile, the makers are getting, in a sense, they are mining it because they're getting this compensation. They get an additional rebate in the form of the inflation. There's going to be a node reward, which is going to start kind of fat initially to inflate the money supply into existence. And then it's going to be marginal, but enough to subsidize the cost of running a node, even if the Litecoin chain, even if we filled up the blocks. So it's effectively a 4 megabyte block size over a 10-minute period, right? It could be kind of big. You might have to go and buy like a flash memory card of a couple TB in 2020 to node it. But you should be able to get, you should be able to amortize that with even a little something, right? And then we're going to try something with a social referral token, so you get that virality built in, and those will be minor inflation. The rebate will be the biggest one that's got the most longevity to it, but it also will be diminishing. And then we have a founder reward. So we're not doing an ICO, but the founder rewards of these tokens are going to be like a sigmoid curve, and that S inflection point will be I think at around like 100 billion in cumulative volume. So we actually really got to get enough hedge funds, enough market maker trader types, and enough retail traders generating activity here, such that we can get to, I'd like to try to get into the 10 to 20 million a day notional volume. I'd say that's like a B for me. Like that's like a modestly successful exchange. And of course I'd like to have this become as big as BitMax and do billions a day, at which point we'll be cranking.
Would you need to have your own exchange to do all this? Or?
No, it's cool. We don't even need to get listed on an exchange to have it be valuable initially. We just need people to come out and take punts on the Oracle contracts initially to get things moving. And then we're going to have on-chain settled contracts. So in order to get that to be robust, you need to get a certain amount of momentum. So I think of it kind of like a buckyball, like Epcot Center. And so every little pair of like token to token trading. So like you create DUSDs and you create synthetic Litecoins and you trade those against each other, right? And you're trading raw Litecoins against synthetic Litecoins and raw Litecoins against DUSD. All of those trades can be agglomerated into this buckyball structure that they all kind of reinforce each other. And to try and like pull the market away, you have the sort of structural tension of that buckyball, and then the oracles are like the struts, so Epcot kind of looks like a golf ball. It would roll away if it didn't have those supports, right? I think that bootstrap plan might work. That's one of the more experimental things, and the biggest risk factor in this design is the liquidity risk. So I'm going to be completely straightforward with that, but the hope is that having a fast enough liquidity for LTC against ALL, you'll have the ALL LTC on-chain settled contract. You create synthetic Litecoins, and then once there's a big enough shelf of synthetic Litecoins, I think it'll be easy to trade Litecoin to synthetic and keep it all trim.
This is pretty complicated, I'm not gonna lie.
That's the weak spot of it, is the complexity, I think.
And so like basically what's backing all of this would have to be trust basically as well, right? I mean, there's no, like Tether can at least say that they've got some Volt and they count their USD every once in a while. So
there's going to be a cryptocurrency at the bottom of that, right?
Okay.
And
backing all of the synthetics.
Yes.
Okay.
And also people could, because it's an open protocol, people could issue their own contracts and be their own oracles, right? If you want to do that. And you could have something like TrueUSD come out and say, okay, we're doing a Litecoin contract that's margined by TrueUSD. So we're putting these tools out there where the general marketplace can adapt to it. But in order to achieve true independence, you have to get enough on-chain volume going that people go, oh, you want to put data on the chain, you're like a graffiti artist, it's a waste. No, it's going to be valuable because it's going to be a reference, a self-reference, right? So yes, absolutely, it's experimental. And in order to accomplish the depth that we really want, we need to get to that like 10 to 20 million a day volume, I think, on the exchange. Well, okay, so you'll have the cash flow, right? So this is like the fundamental thing. This is what I was saying about discounted cash flows. At a certain price, ALL will go into deflation because the amount of cash flow burning it will be greater than the amount of inflation, right? Which is in itself diminishing as it matures over.
So it goes on.
Yeah, instead of in time, it's cumulative volume, so it's all linked to like the performance. So I think if people believe that there is enough of a community trading that that cash flow will be there, and then you don't really need. I don't need to pump ALL in order to make money. I just need to get people using the derivatives exchange.
Okay.
And eventually, I think we'll have interoperability with things like Lightning Network. So I'm not ruling it out. Having a UXTO rigged up in Lightning Network somehow that then it becomes a token that has these dynamic properties. I think that would be really interesting. I'm not opposed to it at all.
Interesting.
Yeah.
So just to give some people some inspiration, like want to come to your network and actually figure out how to use it, how does a average user come and try to benefit from your network? Like what would they have to do to either mine it or to use it and kind of just reach money off it? Because as most people in this space know already, I mean, there's a lot of speculative investors and there's a lot of people coming into the cryptocurrencies and blockchain tech space simply trying to make money. It's like stock market 2.0. So anyways, without getting off topic, how do you basically make money? How do you attract people to your network, and why should they?
So like our business model is we publish, we innovate in some R&D, we write the code, publish it, and then we have these founder rewards that are designed so it's not like a pre-mine cash and we actually have to get a community and trading and volume. So that's our business model. So we're launching on testnet soon. We're gonna have a wallet, have the settlement algo implemented. We're still working on the Tendermint integration, but pretty soon we're going to have this. You can come check out at TradeLayer on Twitter, and then we'll have a link to the demo posted there shortly. So you'll come there, you'll have like a wallet like many other trading wallets. You'll have to fund the address with little test Litecoin, so we might initially support that. And then in testnet, you'll be able to just take punts. You'll be able to get some of our test ALL, and then take punts on different contracts, and we'll be doing Oracle and stuff. So we'll test like the basics in the near future. So that'll be fun. We'll have a few bug bounties, a few little trading contests to get people, make it more interesting. And then we really need a lot of people testing it. So actually the bug bounty thing is really important. That really helps us to launch safely in December, I think, is when we're going to launch initially. So when we launch on mainnet, there's going to be this node reward. So you would download the software, sync the blockchain. There'd be a special address that you would set up because it has to be a hot address. So you need to put a little Litecoin on that, like just bits of it. And then it would automatically kind of raise its hand every so often based on like what the last few block header characters are. There's a little scheme there to distribute it so you don't have to do it too much. And you basically just let the protocol know, hi, I'm running a node, and I'm able to respond very quickly. So if you get that TX out within the grouping, it has to be, a few seconds or like 10, 15 seconds at most. Then you would get this node reward. So it's not like perfect game theory, but it's a good way to create kind of a promo for the community initially. People don't really have to put any money in. They can just be early adopters. And also as a long-term, I think that Satoshi really overlooked that, right? We've had this whole debate. Do nodes matter, right? So Craig Wright, alleged Satoshi guy, I don't think he is, but he thinks it's just going to be a bunch of super nodes, like miners that are in like this cat's cradle, like 20 of them or something. Like, okay. And then the blockstream guys are like, no, it's like there's got to be millions of nodes, right? Well, you need maybe like 30,000 or 100,000 to have like this nice grassroots level, and we're trying to bootstrap that. And we're riding on top of Litecoin. So even if there are only a few instances of our client out there, the redundancy is still out there. But we would like to have the network itself. Like I remember when the Tether hack happened. You remember this last November?
Yeah. It was a big scandal.
Right?
Yeah, but then they were able to like count it, and everyone was like reassured, like it's okay. They had almost the exact amount that they're supposed to have, right?
Yeah. So. There was a review of it, right? And this is when we were all raising hackles, and then there was a hack. And 30 million moved, and then they said, oops, that was not, something happened that was bad. And they rolled out a new client real quick, and it got in with Kraken, Polo, Bitfinex, a handful of these guys, like 6 or 7 of them.
Yeah.
And then the code change that froze those funds was in the client. So there wasn't enough of a community to have, it just became like, what was good for Tether, basically.
Yeah.
And Zathras, one of the early developers, I'm speculating that this is why he left. It might have been a coincidence, but he left shortly after that. And I speculate it was because he didn't like how the sort of decentralized sovereignty was undermined by that. So that's a nice part of it. Like we're putting this out. Like I'm picking these emission curve numbers, and I'm hopefully it's good economics.
Yeah.
It's not like a centrally administered thing. And a nice part of having a few thousand nodes out there is that you can't just unilaterally ship a new thing. You have to get people to buy in. And I think that's what people believe in when it comes to the real value of money in cryptocurrency, right?
Right.
So that's
Cool.
that's a key thing. We want to have you there for launch. We want to have you there trading. We're going to try to get significant Litecoin dollar swap volume, both in the Oracle swap and then on the on-chain one that we kind of will try to piggyback on that, right?
Right.
And that, you see with BitMax, that's a huge market, right?
Mm-hmm.
And they put out the ETH USD swap, and that became the biggest ETH instrument very quickly within a month, and it also crushed the price of ETH, right? And last,
do you think that could negatively affect the price of Litecoin? Wait, don't answer that.
Yeah, probably.
So last question before we do an outro, but so do you think doing this could negatively affect the price of Litecoin?
I think in the long term, it's going to really boost the price of Litecoin. We're going to fill up the blocks, right? It's going to create demand for the actual underlying coin. The trading on TradeLayer is going to soak up Litecoin supply.
Okay.
And to be a team player, I think Lightning Network will also have a lot of positive effects for soaking up Lightning.
Excellent.
Well, because these maximalist guys, they say like, oh, you're going to do atomic swaps with your altcoins, and Lightning Network is just going to crush you because network effects. But that's thinking in only one dimension. Like if you include this dollarization thing, you can see that swaps on the Lightning Network could be a big thing, and I think there's a place for both. I think that there's a place for the spendable layer DUSD money, and then there's a place for having a sort of lightning hedged USD position, and people are gonna pick the portfolios they want, and then we're gonna have interoperability with Cosmos, right? Where there's going to be interoperability with Lightning Network, right? Which is going to, like, TradeLayer ultimately could encompass multiple blockchains in the same fashion, because you're going to have these Tendermint side chains. So everything's going to be talking to each other. Finance is coming with Citibank's DAR, with Backed, which captures the same principle, right? So you can deliver to Backed, sell it forward, do it again the next day, earn a dollar yield that way. This use case of getting dollar yield by rebasing money supply into crypto base instead of dead asset base is the secular story. So ultimately, this is going to take everything up. And what we publish, we're coming out raising at a very low valuation. I got a low cost of living in Chile. We're fine. We're happy to see this galvanize a lot of innovation. And I'm very confident that decentralized banking is going to motivate the next bull market. So while in the short term, you could create $1 billion of Litecoin hedged dollar positions and smush the Litecoin market cap more. Okay, that's fine. But at some point you have a short squeeze, right? That's the whole idea. You soak up supply that's hedged, and then you create natural buyers eventually, right?
Right.
Some people will be savers. They'll set it and forget it. But the smart guys will go into like, okay, I'm getting yield. I had a position, I took profits, and I'm getting yield, and then they wait, and then it's like, ooh, now it's like trading at a little discount, I'm going to cover this, right? Like this is what I tend to try to do as a trader, not successfully, but
it's pretty cool. You're playing the long game. I get it.
Yeah.
Cool. All right. Well, wow, you've really laid a lot of information on us. So you've got sounds like you've got a good roadmap in December. You're trying to release the demo or before that?
We're releasing the demo like this month. So
cool. All right. So how do they follow you so that they can find that?
At Trade Layer on Twitter.
On Twitter. Any other ways that they should find you?
I'm also personally a Duganist on Twitter. Tradelayer.org. You can sign up for our listserv as well.
Awesome. Wow. Well, a lot of information to digest. Definitely follow him and find the demo when it's out. So thank you so much for your time, Patrick.
I really appreciate it.
Awesome.